Welcome, everyone, punters, dribblers, investors and traders, to our Easter Sunday run through of the market, what we went through and what we kind of expecting to happen, or at least getting prepared to happen. It's been a while and on YouTube. So let's get to it without further ado. And thank you to all those who contributed to our weekly report and everything that goes on the website. Thank you to Sierra Charts. We run the Nova Wave through. Excellent software and perfect for what we do. So check those out, and we'll have the list of the contributors either on the website or you know them from Twitter. Remember, like, subscribe, so we can do more of these. So let's get into it, eh? So obviously a busy week ahead. So if we look ahead, we got all the talks about the US CPI and bank earnings and FOMC in between. Lots of goings on there. So before we get into that, let's look what set this market up, okay? So we all know, obviously a busy week. Let me just mute myself ahead. So we came in this time last Sunday, and OPEC had cut by 1 million barrels. That was in addition to what Russia had already done. It ended up about 1.6. Not really surprising to those that trade oil. Perhaps the intent of it, what I mean, not surprising, something was afoot, and we go through that in the weekly here. So, and the setup was obviously there. We knew what MBS and with the KSA plan, we knew that Xi and Putin were together. We knew what was going on in Brazil, the BRIC. So it was all coming together. You never know when. You're just prepared for it. The other tell was perhaps that was that week coming, the week just gone, was when the US was going to take something out of the SPR again. So that was all, everything was telegraphed to you. We know those who follow it technically through the charts, it was a kind of a perfect setup. Maybe they watch that, maybe it's self-fulfilling, but all jokes aside, you knew where it was also as far as what was going on in the physical market. So something was up. The size, it was big. So we go through it in the editorial. So it was an aggressive thing, for sure, but I wouldn't say it's that unexpected. I mean, there is a war going on, and a good friend, Robert Gibbons, makes a good point when he's on Twitter that no one seems to mention the bloody war. Well, there is a war going on. Russia invaded Ukraine, depending on who you listen to, but good, reliable sources put the deaths of well over 250,000 people, transfer. So all that's going on. So the reason I mentioned, obviously not there's a humanitarian, but you got to remember that's going on in the minds of people who are making decisions, right? And the whole geopolitical background of what's going on. So at the same time, we had a move in the US dollar as far as not being the only thing they'll trade with as far as OPEC. That was exactly the same time. So it's obviously all tied in. I'm not sure how it's not obvious in a lot of ways. I think what's happened with good old-fashioned macroeconomics and geopolitical is you've got a lot of people that have set themselves up to try to make a buck out of it as being experts at that and having no idea. So it's also very valuable, I think, to discuss with people that have been around it, be it trading at a bank or a big fund or whatever, kind of familiar with what's going on. Because what's going on now is repeated many times through history, right? We'll go through later when we get to the financial and the bond side of it. It's very, very different there, though. But, a leopard never changes its spots. So we had China, Russia, Saudi Arabia and Brazil all saying to different degrees they're going to trade together in the Yuan because, obviously it's to get around the SWIFT as far as Russia does. Now, people get upset, but to me, China, it's pretty clear, is effectively using Russia as they are Africa and all these people as cheap sources of energy. So it's a gift to them getting cheap energy, being able to dictate terms. India is much the same. As far as that, not with China, but getting cheap oil, etc. So make no mistake, the sanctions and all that are working, which also, as far as denting, whether they're right or wrong, I'm not going to get into that. You know my views on that. But they are affecting, and there's a need for cash, obviously, or rubles going on. So that's all in the background there. China's obviously concerned that sanctions could be debilitating to them as well, money tied up. China at the same time, which doesn't get reported much in the States, is bending over backwards to tie things back up with Australia, which is relevant very much so because of commodities, right? So, and we read all this, you gotta wade through the bullshit basically on things like Twitter and or social media generally, but you've got the same thing on mainstream media because good journalists are hard to find. It's all about sound bites, etc. So what we know is this: China's biggest trading partners, the United States, Japan, Australia amongst them, right? Commodities, coal, natural gas, iron ore come basically the major components of Australia. They sell all this stuff to keep their standard of living going to the United States and Europe, right? So and even when there was a so-called ban, or the trade war, whatever you want to call it, with Australian products, you still saw Australia flogging coal, etc. They're just at a much higher price, right? So their trade surplus is massive there. So that's all going on in the background, right? So China wants to mount its waste. Now it's doing its war games with Taiwan over the weekend. That's pretty much in response to the Taiwanese president. She visited, I think she went to Mexico, but definitely the States, with the his name escapes me right now, the speaker for the Republican Party, his head of Congress, whatever. Right, so that's a response to that. The reality is Taiwan Semiconductor, which incidentally report their numbers out in a few hours, is the biggest semiconductor thing in the world, company, producer, not thing, foundry, and we also all know what's going on there as far as sanctions, threats, Japan, America, China, right? So it's all, if you want to stand back and look at it, it's a big game of chess and be open about it, right? Don't get caught in the BS. Just think logically. As far as the US responding to it, I think the main thing to watch is who's the biggest producer of oil in the United States is Texas. Governor Abbott came out and said, hey, this is a good opportunity to increase production. Now, a lot of this isn't as easy as it once was because a lot of those fracking plays have run lower. They're harder to get up. Perhaps Venezuela becomes more relevant. We'll see as it goes on. But anyway, that's going to happen. Now, the big thing going on as well, and this is all related if you want to stand back. Exxon, they've been sniffing around for a while, and there's a good article on the website. And we'll bring that up later. We're just going through the major points right now. He's looking at buying Pioneer National Resources, which is the biggest oil producer in the Permian. Exxon, the sixth largest, obviously that makes them massive. It's all about price, obviously, and that would shore up the US even tighter. They have a cheaper production, etc., etc. So that's all in the play in the background there. At the same time, you're seeing China buy up gold. Well, so back in tune with, let's go back to Australia right now. So Australia is the biggest gold exporter in the world. So forget about all the nefarious comments about the end of the dollar, end of the world, World Economic Forum, blah, 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 right? Look at kind of the more reality of the situation, of what's going on. And people that are clearly not on the same path are actually doing business, right? So gold, and we'll look at that when we get to gold, but gold is over $2,000 US, right? So that's significant. Is it lasting? And we've also seen the other, if we want to talk currencies, obviously crypto, massive bounce there from the lows. A lot of that is short covering, the whales, etc., right? Anyway, so moving right along. So the big thing we want to point out is, as of today, it's not the end of the world yet. It wasn't 2008 revisited. And I think people got to get a good understanding that this is very different. Each collapse has been very, very different. QE is different. This is not the 1929-30s. We've seen, whether right or wrong, people are more attuned to what's going on. And that goes from a lot of the big shops outside the world. For example, oil isn't OPEC, right? Or other government agencies. Look at the big players in oil are the big traders, right? So Trafigura, Gunther, and obviously Vitol, right? As well as the big oil companies. So as much as people want to say that, and Saudi Arabia wants you to think that, and Russia wants to think that, let's be realistic, right? Look at the price. It's steady around $80. So that everyone's kind of happy there. Anyway, it was not the end of the world. And so I like the work. Do yourself a favour, follow them. They're a Canadian bank called Scotiabank. Kind of came across them a few years ago. They got a good little economic team. Perhaps they're Canadian, so they tend to look at things more globally. But they put out some nice work, and they obviously know. So the important thing is understanding what traders are looking at, what politicians and big macros are trying to do. Now, it's never that easy, but you want to try to get in. A lot of it becomes predictable. Now, the other thing that becomes predictable is whether they're right or wrong is often impacted by just the sheer force of nature of the markets, right? So you look at flows, you look at option levels, open interest, and stuff like that, right? And the big thing, as I always say, bonds and Forex run the whole thing. Why? It's money. Follow the money. That couldn't be more succinct to those. So they do a nice little thing. They've done it a few times, and I've put it in here. They look at the actual liquidity of the market, which is important, how it's all going. So look at these, and we can see that market stress has definitely improved, and since it all went down, and basically California and New York regional banks went bust. Now that's not the whole banking system specifically, and I want to say his name was Barr, was before Congress last week or the week before, and it was shocking management, ignorance, politicians involved. They had crypto assets that you couldn't, it used to be you couldn't find a value for those in the bond market on CMOs, the spread was so wide, but there was a truth. If you're from natural gas, we all know the games went on in basis and stuff like that. Well, some of these cryptos have no basis whatsoever, right? And so they were lending to it, and we know about FTX, and don't just think of, okay, Bitcoin's bounce, it's all good. So look at what these guys were. On top of that, they were lending on the most overvalued property markets in the world, right? Well, in the US, California, New York. People start to believe these are real prices. They're not. And you've seen where everyone's been fired. If you looked at and we get to the economic reports, they're in technology and financial from these sort of shops, right? You see people, I saw someone shared a text from some bloke who worked at, I want to say Facebook Meta, complained about, they're so overpaid to start with. They get themselves in. They're not, that whole thing was a load of wank. Anyone over bloody 35 knew that was where that was going to end up, right? Typical bubble stuff. So that all filters through, right? Through everything. So the earnings, we're kind of jumping around a bit because there's a lot to talk about. But the earnings I want to look at on Friday isn't JP Morgan, isn't Wells Fargo, it's PNC, because they're kind of the mega regional, if you will, right? See how they're doing? And they're in a different part of the US, right away from that. And hopefully in 4 years' time, 2 years' time, 3 years' time, we're away from all this partisan politics nonsense. It really is. I don't know how anyone can be all Democrat or Republican, to be honest, because there's so much, it's not all black and white, right? Anyway, we digress, but you need to understand that. So when you're trading, dust off all that, off how you think and vote, and try to work out what the market's doing, what's going on, right? So anyway, what I want you to do is look at the interbank lending risk policy, look at these charts, go through them and understand them, and you can see it's not as bad as what it's made out to be. It's not good, and we'll get to the saving grace to all this as we get to it. So we go through that. I'm going to bore you all reading all that. But basically, unemployment was better than expected, barely, but enough in a very thin market, as you see, as we look at bonds, that they had to sell bonds and send yields higher, right? Basically, whichever way they pushed. There was the S&P was open for a very short window. I think that closed up 11 from what it did on Thursday. So basically non-event except in the 2 year, which is the one we want to watch at, right? But look at the difference here, these reports. So this cooled as we'd expect, but you're getting an offset in the jobs, right? The job cuts had the biggest surge, but they're still way up there. ADP, which came out earlier, you can see that miss. So you basically see a transition of jobs, right? And job openings are down at 2 year lows. So the Fed's probably happy that this is happening without wiping everything out, right? So we'll see. As far as inflation goes, one thing that I think a lot of stuff is just exaggerated. Because that's what we live in, a world of exaggeration. Everything's exaggerated, right? And everyone gets upset about everything. You can't have a reasonable conversation with a lot of people. That's why I mentioned this partisan crap. Because they're so wide the other way. It used to just be you got that way over as an Astro talking to a Yankee or you can't, Texans are irrelevant. So maybe Dallas Cowboys versus the Giants. If you're from Sydney, the Roosters versus the Rabbitohs, this sort of thing, right? Queensland versus New South Wales. But it's gone into the real world, right? And it's about as nonsense as sports. That's why it's meant to be released. But the reason I bring that up, so food prices have collapsed as far as indicators, but it's still expensive depending on where you are, right? A lot of it's to do with transportation. So a lot of businesses are keeping the profits high as long as they can, because they're told it's the end of the world because it suits politicians or people flogging stuff. But you're seeing around the world, people have had enough of it. You're seeing protests in France. They got pretty hectic over there in England, in particular, and obviously in the real poor. Well, we just don't. That's the sad thing. People that aren't in America listen to this. We don't really see it on TV, right? But that's also because it's not that bad unless you lose your job, etc., right? Which is a whole different thing. So anyway, that's why I say it's important for non-traders to grasp that and walk away. Look, if you see someone if you follow Twitter, and I see people with hundreds of thousands of followers that I wouldn't piss on, basically, excuse the French, so they don't know what they're talking about. They're regurgitating already incorrect data. So use common sense in a lot of ways and try to stand back. We know there's There's so many lies out there as far as news, mainly out of regurgitation, or people think they can lie, right? That's what's kind of happened with politics, particularly in the United States, right? You got such divisive characters as Donald Trump and Joe Biden and then their age, and yeah, you could go on and on. But what that's allowed is people to say pretty much what they want without thinking. So don't use that when you're trading or investing. And when you don't know, you don't go near that market. So this has been a fantastic, very predictable market over the past couple of years. And sometimes you just walk away. And you got to be happy to take the meat, right? We all know, we've gone over on these... when we're on here, we've taken a break, but we're a period where we really were intensive in every day, myself, Madavi, and of what people are watching, right, and what's affecting markets. So one thing I like to look at is Tesla. Doesn't mean you trade it, but it's a great barometer of that whole partisan love and hate. Tech, EV, and talking about divisive guys, there's another one there in Musk. But what it is, as far as we know, it's very deep. So and we know these same-day options that used to be the game of us in the commodity world, and now the biggest thing running stocks, right? They call them other stuff there, the DT, but basically it's same-day options, SDO, right? So you can see that that's very well technically. We go through, so are we screwed? Now this is the bit that a few people, it was actually myself on Twitter at Traders.com, going through a little bit of this with a few people. So we got to compare this to 2008 because that's what everyone's going to do, right? That's the most recent, other than the COVID one, which was so fast and furious and very much emotional. So let's look at the last one. So there's a greater credit risk this time on the banks. And what I mean by that is we've seen a dramatic shift to like private equity. Those that are following BlackRock has that big property funds where they're not allowing people to pull money out. So people, when they went that way, wouldn't have known those markets were liquid. They wouldn't have thought they were that illiquid, right? But that it helps to have your own opinion and be sensible and not be all in. So my guess is they're not going to allow that. They're going to obviously keep that as long as they can without a collapse. Now the relevance of that, as we'll get to, is we go back to that banking system. So the credit risk has gone away from you and I and our mortgages to these massive big players. Now, you're going to hear a lot in these all this week in the lead up to these banking earnings and the banking earnings themselves about commercial debt, right? Buildings, rents, because we know that they kind of screwed us all, these big private equity firms, and screwed everyone, bought all these properties up. The poor bloke that went broke, thrown out, then they push rents through the roof, etc., etc. Now they're whinging about not getting their money out. Well, do we really care, right? As far as from a soft. Now, from a banking point of view, this is probably where the GSEs, which have become massive as will go on later through Fannie Mae and Ginnie Mae and other entities, bailing everything out, right? So that also brings it back to a safety level, what they can and can't let go, right? So if all that falls, then it's, it's all over. So whether it does, and so these are things to grasp. It's very, very different, certainly different in 1929, 1939, the Second World War with Weimar and all that sort of stuff. And very different. Each one's been very different. We're a very different environment. Like something like FTX is basically money just gone poof. To many people, right? So that's a fraud of massive magnitude. There's conspiracy theories all about that. Some of these conspiracy theories, what are called conspiracies, actually come true. But it's kind of always been that way in a different guise, right? So obviously a lot of money lost and a lot of people to be blamed, etc. What comes out of that? We will see. But what we're seeing is a lot of these things, the derivative market's so massive that it's actually able to absorb all this. So what used to be the biggest fear is a saving grace to a lot of this stuff, right? So anyway, go through these numbers later on. So you notice financial sector debt jumped 9.6%. Now, last time that happened was 2007. We all know what happened. And if, for those from economics school, particularly CPAs, etc., say, well, that's all bullshit, that's all double counting. That's all fine and dandy until it changes so fast, which is what we saw 3 weeks ago, or was it 4 weeks ago now, with Silicon Valley Bank, and then the others all go. Well, actually, it was SI went first, right? Because they were using, if you remember, California. So there's a distinct thing where politics got in front of common sense, right? In California and New York. So, and those that never get that will never get it. So don't bother arguing with them. You're just going to waste your breath. But that's kind of what happened there, right? So you had Signature over New York, of course. And the short sellers then attacked all the others, but they survived. Because the difference was the Feds, Federal Reserve, and the other central banks around had time to gather. Now, BlackRock and all that, people, they run it all. Well, there's so much money involved in those people, Vanguard as well. They've almost got to be involved, right? We can think conspiracy if we want. It's kind of more common sense. Just think more of that in that situation because it saved it. Now, the reason I bring that up is why we look at, I don't say they, but financial sector borrowings become relevant because the speed of everything is so fast and fake news is so fast. It happens, it comes out, and with AI talk, that's why they're cracking down, they're looking at cracking down on AI, not because of some nefarious, world WEF, I'm going to use WWE, UFC, whatever. Anyway, cracking down is because what happens if a war comes out because of something on AI? You got some crazy buggers running the world right now. We got wars with Russia and Ukraine. We got North Korea. We've got, people as 80-year-old president of the United States. You got a guy running China his dad was, Chairman Mao, etc., etc. So you got all this stuff. You got to be a bit careful if someone wants to be first to push the button. So just think about that a little bit more logically. Anyway, so if it doesn't burst well, that's why that's relevant, right? Now, the other thing you really want to get a good hard look at is this GSC assets, as I spoke about earlier. Look at the dang size of these things. 2 trillion. That's 29.4% in just 3 years. Now, we know a lot of that is, and this has got to be common sense, right? It's bailing out COVID and all that. Whatever, it happened on top of 2008, right? And you got the AFHLB assets. Now, here's what's crazy. And someone asked me, is that for the first quarter? Yeah, the estimate for that is 400 billion added just from Q1. So that was when interest rates all went up and all that. And people blame the Fed. And some people don't want to blame the Fed. So a lot of that was, banks. I don't know anyone I know who's a bond trader, oil trader, currency trader, or anyone of size knew that they couldn't go on forever, right? So they weren't buying bonds at 0% or 1%. And look, there's people that had to. They're your GSCs. They're what went on in Europe to maintain bank laws, Basel and all that sort of stuff, right? But let's be realistic. A lot of people made a lot of money on that. And as far as oil goes, just look at the earnings out of the people I mentioned at the top of the hour. And there's articles on the site. They use this site. It's all free and everything. I don't know how long we'll keep it like that. It's a lot of work. So anyway, we call that how screwed are we. Look at it. And then each area we now have our own. So here's bonds. I'll just click on it real quick. So go do yourself a favour and look at what's going on in the bond market, even if you're not traded, because that's going to be ahead of everything. That in Forex, be proactive. Look what's going on. Remember, you don't have to always have a position, but this may save you from having the wrong position. Look at the curves, right? Look at these spreads. We've come all the way down there. We know that means recession in a normal way, but we are not normal. So if they can keep pushing the envelope, right, look at all that. Go through your bond charts. I wanted to come here quickly to show you what happened on Friday, right? This is a pop, and this is a big move on the, this is a 10-year, right? So 2-year was even more dramatic. So look where it held, right? That's where resting orders more than likely were. And we've come from more here. So is it that big other than when you look at it one day? So what I want to see is what it does next week as people come back to the market after Easter, FOMC, CPI, bank earnings. Look at it. Look at a little bit more there. And don't be the bloke buying here on anything, selling here. Take your meat here. Take your profits in these markets, right? And so look where we are longer term. This is 10-year. So we've come all the way. What did it? Of course there's going to be a reaction here. Look what we've done, right? The yield came all the way back. Bonds have rallied from 4.4, or what I think it was, 4.3 something, whatever, back to here. Look at these moves, but look where you come. So the reason anyone who just says charts are bullshit or fundamentals bullshit, ignore them. You got to look at both, right? Because this is just telling you a story where we were. You work it backwards. Look at and it all fits in with the reason I start off with currency and oil, and the whole geopolitical framework is this, right? And understand we're at war. Whether we like it or not, it's effectively a war. Look at these Federal Reserve numbers that they put here. Your mortgages, spreads, and it's all pretty cut and dried, if you want it to be. Okay, let's go back to the main thing. Did that stuff everything up? Probably. Okay, so this week we got CPI, bank earnings, retail sales. We know that central bank, same thing there. I just clicked it real quick. You've got a good record of what went on, so you want to see what Reserve Bank of Australia and New Zealand said. The relevance is yes, tiny countries compared to the US or France or England, whatever. Commodity powerhouse of the world, and this is a part of Asia, right? So yes, New Zealand's tiny, but relevant because of the impact of China, the input of China. We look at and again I get a lot of this from Scotiabank, because they have a good, I discovered, maybe that's how, I can't really remember how we discovered them, probably one of our Canadian friends, but I like to look at what's going on in South America because it's very relevant to the United States, particularly Mexico, right? Natural gas, we sell there, gasoline, and you got Brazil. And what's interesting, what's going on in Brazil, is that they're doing all this stuff, but they kind of, you saw Exxon pulled out. They're still there, but they stopped drilling on, I think they spent $2 billion or something, because they couldn't find any oil, or certainly not enough worried about. So guys like Lulu can make all their noises in Argentina, but they're hand and foot to IMF, basically, and oil's their thing. And if they don't have it, blah, 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 right? So let's look at it. India is also relevant. So that was the end of the world there with what went on. Well, how long ago was that? About a month ago, yeah. So this was going to be 2 or 3 of us, but the other 2 Easter lunch became Easter drinks, etc. So you're stuck with me. So that's all very relevant there. And what's going? And who do we have? We have Bank of Canada's the big one. So we want to take a look on that. That's very relevant to the United States as well. It's one of our biggest trading partners. It sits above us. Energy, and of course the property market around Toronto and stuff. And Bank of Korea is also relevant, very much so for commodities in that part of the world, right? China, Japan, Korea. Okay. If you're Australian, very relevant too with exports. Okay, as far as what we got coming out, we got Williams tomorrow. That's one of the new ones, so I don't know much about them. Goolsby and Harker and Kashkari out on Tuesday. Barkin again on Wednesday. We got BOE and Bank of England talking as well. The minutes is Wednesday, of course. We got the German central bank. So the Bundesbank, always worth listening to because they're the dominant partner. And you really want to look at, so currencies and bonds are already positioning themselves, right? Because of Easter gave you a chance to at least reset, because a lot of these countries celebrate Easter, right? Good Friday's a holiday, Easter Monday's a holiday, and at least in most of the Protestant world. It's not in the United States, it's a Christian country as well, but so that's more to do with, that's why the bond market was open on Friday, right? You can't have 3 days off or something. Anyway, so we got the debt ceiling. I keep that in there, or we keep that in there, Harry does, so that we don't forget that could pop up, particularly with the partisan politics goes on here. We keep an eye on what's going on in China. There's always a couple of good things they put in there. So look at what's going on there. So people think, oh, China, Russia's going to run the world. Well, one's a bloody war getting their ass handed to them. Don't believe the fake stuff. And the other one's kind of in a civil war eternally. China's such a big place of what's going on, and the different groups are constantly putting out fires. But look at these news items from Bloomberg. So China's provincial governments are facing unprecedented debt burdens following collapse in land sales. We don't hear about that. Here we hear that their properties getting bailed out, etc. Well, don't hold your horses a little bit there, right? China is investigating, or they're charging Evergrande, is it? I always get them and that ship that got stuck mixed up. Very, very similar names and probably appropriate. So you're seeing that going on. But look at this. China's local traders are borrowing a record amount of short-term cash, right? So it's not all good. And remember, they're trying to, yes, they are communists, and they try to rule like an iron fist, but they're not silly about it, so they have economic zones, right? So this becomes relevant. So they're trying to work out how to have the best of both worlds. We go about that every week. Inflation, read through that. Volatility. So look how this has died off. So this was the bank crisis. We've come all the way down here. We've spent most of the year. Now, this is difficult to read if you're going to compare it to back in the past. Since then, we've had all those changes we talked about quickly at the top of the hour with QE, etc. Flooding of it, the GSCs over the last few years. We've also now got instruments you can trade, which distorts it all to do with VIX, right? So basically every Friday, vol just collapses, unless it's one of those weekends. And the spike, because the punt, right? The market makers got it, versus the market taker. So that's distorting all that. But bottom line is, I look at this and I see a lot of people lost a lot of money. A lot of people made a lot of money, right? As far as option pricing goes. And we have a look here. You got your put call ratio. Look at that. All right. Interesting. Back. We go through the markets real quick. Okay. So what we've seen is, as far as for the year, right? The S&P's up 6.9%. Good steady Eddie. That's 3 months. So, but look at what really came up. A lot of that was because the market got really short and overdone. So the Nasdaq's up 19.4%. We all know the talk about semis, etc. is a big swag of that. So you look at how the different markets are doing, right? Look who's down. So small. Russell's basically smaller companies, right? And the mid caps is barely up. But by the same time, the Dow's barely up, right? So your powerhouses are these two on each band. So it's kind of handy to look at. So that's relevant as far as recession talks, government politics, different states, all that becomes very relevant there. So look at the sectors, and you can see who's down big for the year. Banks are down 20%. Well, that was already happening because of interest rates, and that pushed it further, right? The flip of that is semis up 21%. Now, if you listen to all the FinTwit dribblers or the analysts working at banks, who half of them get the job from what school they went to, and they tried them on the trading floor and they're next to useless, right? So you were told to buy banks, sell semis. Well, that's a 40% swing right there, okay? Gold's the other big one. So look at HUI, which is the index, gold index. That's up 18.3% for the year. That was up 6.1%. So gold bullion popped $39, even though it fell 10 on Friday or Thursday. Sorry, it was a 9 or 10. So follow. We got a good friend Vince. He's changed his handle, but I think, if you follow us, you know what I'm talking about. But he has his own podcast, and subscribe to him, and his old newsletter, which is great every day. And I'll put some of the things we're talking about, I'll put on in YouTube and on Twitter. But he's a real character. A lot of us, as we get, we try to keep it real, or at least funny. So there's a lot of talk about sport, a lot of talk about music. So digression, but there's a reason for that. You don't want to be 100%, and you want to be around something that keeps you grounded, or at least emotional. So those are the two things. So I am not a gold bug by any means, and do not invest in gold as a general rule. I will trade it because it tends to go on breaks, right, and fail. So you'll see us watch it. And GDX has been really one of those underperforming indexes, and there's not many. So I know a lot of you that follow us in Australia, you do really well trading those gold stocks. And in the States, it's basically, the symbol's now gold, but that's the old barracks. They merged with, what was her name? The symbol's gold as well. I'm trying to think of it. Anyway, so I like to trade that through that. I don't invest in it. As far as I certainly don't keep it under my bed. I'm not an end of the world bloke, if you haven't worked that out yet. So there we have it. Been a great trade though. And the reason I mentioned Vince was he trades gold. He's more of a gold bug than what I am, for sure. But he understands the way that market works, right? So we look at what was big. The big winner last week was United Health. Guess why? They're reporting this week, right? Often it's as simple as that. So look at ahead of the game. Look who's reporting, right? And Johnson & Johnson was because of their settlement. I'm not sure why. I haven't never worked out why. And I don't know how to sometimes you'll get them repeated once. It's because they're on more than one index, right? Look who's getting smashed, right? R&B, kind of logical, right? But these also, it's all about money flow. Z-scaler or Z-scaler, however you want to call it. Z-scaler. Tesla is violent up and down every week. Look at who's down. All tech. A lot of these like Marvell, they're part of semis. So as we look at NVIDIA, you just take your profit, right? Look at what's going on in the rest of the world. We'll look at the charts real quick. This is becoming a real long podcast, so I think we'll break them up separately. As far as looking at those indices. Asia, remember China and Hong Kong did not have Good Friday off. The rest of the region did. Maybe not South Korea. So, anyway, but we know others did, right? Remember, that's their religious holidays. So if you're not Christian, you're not going to have those off. So just think logically. Aussie stocks had a good week. They had a really good year. Then basically they fell for 6 or 7 weeks with the interest rates. But again, they got way ahead of itself. Their banks pulled back. Basically, for Australia, we keep an eye on the banks. And so they're much tougher laws there. They're not like here. Right, so you got to have a higher percentage to buy a house. There's tougher laws, etc. Right, to support. So, but you're keeping that on the sector. But again, that's why they didn't get hit as hard as the JP Morgans, etc. And of course, you want to look at resources. So iron ore. So BHP, Rio Tinto, Fortescue. And then you got the lithium miners there and the gold miners, right? So it gives you a good idea, even if you don't trade them, of the commodity world. Now, as we go on to emerging markets, remember I like to look at LATAM for the tie-up with the States and also the world. Brazil is now in that little group, right, with BRICS, etc. They're already there. Powerhouses of the world, they tell us, right? Mexico, very relevant because of the tie-up with Texas in particular. Then we want to look at the other countries. We look at Turkey because of its relevance to... I'm going over stuff. We just haven't done one of these for a long time, so sorry if I'm boring you. That new people might have heard. Turkey, where its situation is as far as Europe goes, relevance to Russia, the dirty deals they do non-stop, as Madavi's mentioned over time with Iraq, Iran, Russia, Syria, all this stuff, right? What I look at is the currencies basically just keeps collapsing. The guy's tried to save his problem by lowering rates because everything's a conspiracy with banks, etc., blah, blah, blah. What he's done, they import most of their stuff's kind of screwed it for everyone there. Talk about an accident waiting to happen. Elections are coming up there with Erdogan, etc., so he'll do anything. Then we got Russia. The relevance here is it keeps an eye on how much that little, it's a very small index, and you want to talk rigged, it's basically Sherbank and a few others there, and the ruble, and obviously the people playing there, it's trying to keep the illusion that it's all going well. So we keep an eye on that. Okay, let's look at so there's a little blurb there, but let's look at the stock markets have been pretty cut and dried, right? So we spoke earlier about the VIX, the relevance. You want to see how much people are paying for their puts here, paying for their calls here. But look at, you're getting these key spits, right? And this has been a truck since that dump down there at just 3,500, end of the world. And look at this steady rise through the Murray-Math grid. And we've got a way, so just think of the cloud. Nova Wave is a study art. Technical analysis is an art, and you want to use your science, your maths, to bring your probabilities in your favour, right? So there's a lot of the, I think as far as gambling, such I'll say gamble responsibly, right? So you'll win some, but you'll lose a lot more. So that's what happens with options, right? So that's why we watch VIX and that. So basically a lot of it's gambling around it, but you want this meat. Now look at how these spheres of influence is really, really important for those that understand Nova Wave, because you're putting these studies together, right? Of maths, crowd behaviour, Elliott, your Gann, Ichimoku. Now, there's a bloke that he's a good bloke, but he's every day he's flogging his system really. But did I say that loud? But it's all so day trading off algos is one thing. Managing a portfolio and looking out in a bigger term for those with size is kind of more what you want to look at, right? And so there's a time you don't go near the market. Every time I see a bloke get on a podcast or TV and go on about liquidity, it's low. I mean, of course it bloody is. Don't waste my time, right? So, and when I say don't waste my time, I'm saying don't waste your time. So there's a time to be in markets and a time to be not. That's why we look at dailies and weeklies. Look at the twists and this sort of thing, and that's what it's telling you, right? So you notice, and we said publicly a year ago, is it that long ago? Maybe not that long ago. We dialed back. We just trade the indexes and big stocks, right? Why? That's where the liquidity is. Don't go. Do we really care if we miss out on these big pumps? We didn't when it was happening. The GME. So you want to have as much control as you have. You want to know where your edge is without the ego, right? Stay away from those that have never been there, because at the end of the day, it doesn't take. So look at this, right? Look at that yellow line. Isn't that uncanny? It's very, very predictable. So we look here on the weekly, and you can see even more so, right? So do the maths and what that's all telling you. Look at the resistance. Look, we're up against. Now, the game doesn't change until that all changes. So a lot of people are calling this a head and shoulders, this little bit here. Head and shoulders should take a lot of time. And we know what just went in. We know what went in here. It's a lot of people got caught. We know about the options. Same deal up here, right? So look at these numbers, right? Look at, it's all maths, and you extrapolate that back through returns. And we know, so the reason I harp on about a few certain things is the game has changed, right? So anyway, look at this. All this, keep charts really simple. You want to use, visually, you want to look at what's going on. And you want to look at the changing geopolitics of the world, right? They're very relevant. And you know, of what's going on. And so we had a couple of big events over the last few. We obviously had the whole COVID thing, changed the game a lot a bit. And that's why those GSEs have so much debt, money, worthless assets, whatever they are, right? And people are rebelling around the world, which is good. People are questioning. You know, obviously it goes a little bit much, but you kind of want that, right? If authoritarian governments get too much power, you want protests and all that to bring it back. It's like when you have really shitty leaders. So from what I noticed, when a righty, let's divide them between righties and lefties. When a righty gets really bad, the righties turn on them and chunk them out. You saw that in Australia with Morrison, who was so liberal, is right-wing outside of the States. And then they put in a new guy, then you get a left-wing. So left-wing outside of America tends to be more working. Right, sorry. You got, there's tier 2, tier 1 countries, advanced, however you want to call it. So tend to be more labour rights. Well, there isn't, obviously standard of living is a lot higher, whereas in somewhere like Brazil, it's going to be more extreme, right? Because you've got sheer poverty. Not to say you don't have poverty in the West, particularly in the United States, but there's a lot of difference between the standard of living in the US and the poorest bloke in Australia and the poorest bloke in America, for example. We're just trying to point out the difference in the US is you got rich people on the left-wing side, for whatever reason. We won't go into it too much. But people in Australia will ask me these questions. I'm like, well, it's really bloody different, right? So that's the reason I'm saying that. And it can be very hard to work out. I still haven't worked it out. I've been here a long time. So that's why we look at charts, right? So we want to work out what the people are doing. So we know to keep an eye on the politics, how it affects and how it reacts, right? So that's why we look at the bonds and all this other stuff, right? So don't get caught up in all that nonsense, because it'll just give you a headache and it won't help you. So look what we've seen. We got these two big things, and this was a retest of this, right? That's why I brought up the big events. So that was your whole COVID thing, right? And look what we did. So keep GAN and I like maths really, really well because it keeps it in perspective. So 38%, 50%, this is weekly, and go back to your daily. Still your different time frames, right? So remember what all these mean. I guess we should have one just about it, what cage and all that represent. But it's just basically balance of probabilities, you know. So it's different to gambling on race 6. But there is that high attitude. That's why you never go all in or all out, right? We joke about it. And that's why the blokes I see hovering around on FinTwit, that's what I go on about. We try to help a few of these blokes out. So they just flog stuff, right? But they're the same ones who are telling you buy up here was everything's different. Everything's different. Our friend Tracy, who's awesome, you know, she goes by Chai Girl, but you'll see her a lot on different podcasts now, as far as particularly macro with oil and gas. But also, I've known her for a long time now, but she picks up the changing environment really quickly, right? which is very, very important. So the overall swings and stuff. So the reason I brought her up was she always reminds me is this time it's different, right? It's kind of a running joke. So that's why when everyone gets really bullish or really bearish, it's really important, right? Or the term sheeple and all that sort of stuff. So we're kind of dribbling on a little bit with this, but I kind of want to get the point across so that you don't get all bearish here and all bullish here. You want to recognize change, though, when it all changes and how quickly things can happen. So those banks, you all knew it was going to happen, you just didn't know when. I don't count that as a black swan because that was kind of going to happen. The big swan event is when it catches everyone. I think the Fed was onto that, and that's why, again, we talk about that other stuff, right? It's how quick they were, the swap lines and all that, right? Anyway, so we go on. Nasdaq has been the leader, and it broke out earlier, but so it's up 19%, but remember that? But look where it is. It's a long way from top of that cloud, whereas the SPOOs is at that cloud. So we're watching cash here, not futures, right? And I like to do that on charts because it doesn't have the distortions of rollovers, etc. The Dow, which is the least performing, interesting, right? It's over all this. So be careful just looking at returns. Go back and look at that, right? Where it come from. Now, this is a beautiful little one here. Again, very similar, right? So power of money, switches, a lot of this predictable. Now, this is the dog of the bunch, right? And our friend Benji, he often brings this up, right? So follow him too. So his dad back in the day, he won't mind me mentioning, was he probably don't want me to mention, was a great metals trader, I remember. So for my time, but still well known, good bloke. Anyway, good trader. Look at how so this is way under low. So think about all this is telling us. This is telling us. So this is when this busted down, and this was at critical level. So a lot of people, this is when the world got all bullish and forgot risk. And that's why we had that as a critical line. Remember, we don't change these, right? We don't go back and refiddle and delete and all that fake shit. So the spit of a spit is one of the most powerful things. That's when it fails. So it would have to get above all this to consider things change. It's going to be very hard with interest rates at 5%. So we need interest rates to come down. So people don't. Here's when, I mean, you can just call it art. You want people to earn more money if you're a pure capitalist, I would have thought, because there's more money to go around. So we need. So if you're all righty, don't get mad at me with what I'm about to say right now. But you need wages to go up. You need the minimum wages to go up to pay for everything if you want it to stay there and keep everything whole. Now, the real lefties out there, that means you got to bloody work, right? Okay, so it's all kind of mucked up here. That's why people try to explain it from other countries. I'm like, oh, bloody hell, I don't know. The relevance I'm talking about that is this chart right here. This is full of blokes that don't make money, that are broke. But it's also full of blokes that are going to be the next big one, right? So look at what the tanking and all that's telling you and understand what is behind these indexes, right? So here's the semis. So semis was the end of the world, and I haven't changed this because this is what we're watching. We're watching this break from here to there, right? Crowd behavior, that's what you want to watch. So when it got back above this, 61.8, it became very powerful, and that's our circle. And there's your reverse head and shoulders. So if you want to go all bullish nut job, right? Imagine if this pattern happened in the SPOOs. It can happen. Always be aware, anything can happen. And it's all to do with money. And remember, it's crowd psychology. You know they're all going to be bullish if it breaks up. You know they're all going to be bearish if it breaks down. Think of that. Just think ahead. Okay, so this was a great short. Look what was off, the 50, and we just come back and we're testing the tanking. Now, there's a reason we watch the next one together, right? Look at him, little NVIDIA. So NVIDIA, you can't make this stuff up, right? Look at your 61 point out, that held. So that's your positive beta. This one busted, right? It's part of the same index. Watch them together. But the biggest semi in the world isn't even in it. It's bloody over in Taiwan, right? So that's all relevant with your geopolitics. All that stuff goes together. So look at this. This is classic short covering, right? It didn't give you a chance to get out if you're the wrong way. And remember, the vol on this is really, really high, mainly because the spreads are really high. So if you're covering yourself with margins, you got an issue, right? So you want to be, and then with options, etc., all fit in. Now look where it topped out, and I did comment on this to some bloke on Twitter. So generally that's going to be me, right? But not always. If I'm into reacting, but it's not going to be me putting all the news up. So if you're wondering how we do it, the trades community bit, that was a project. Look at this, plus 1/8, didn't quite get there. So if this busts down, look where it goes to, right? Remember, if it breaks up, it's crazy to think how close this and Apple and some of the other ones are. So you want to hope that the wrong people aren't in them. These survived the whole tech bubble bust down and also the tech bubble bank, right? So look at that. And the reason this is so big, and we keep this so big, is it's so influential. It's interesting how that all mapped out. Now, look at this. This is Apple, right? This was meant to be the end of the world more times than not. But I mentioned this many times over the years, that this is held by so many central banks that matter, namely the S&B, right? The Swiss National Bank is one of the big holders of this. And it's kind of like BP, the reason that didn't go bust after the big spill in the Gulf was so many British people have that in their 401k. So we always hear that the Bank of England... So remember, the difference between the Federal Reserve, the Bank of England, Swiss National Bank, RBA, is a private bank. But it still wants America to survive, or they're not, it's owned by a private bank. Sure, but so think about, but that is the big difference. The relevance, why am I talking about that with Apple? Because this is similar to so many people in America. Now this makes money now, pays dividends, so it's basically become a bond, but obviously it's, look at this rally, right? But look how predictable it was. If you took a view, it's in this channel, right? And I'm not saying this as in Johnny Hindsight, the greatest trade that ever walked. I'm just looking at it mathematically and crowd behavior through Nova Wave, how it works, right? Now, here's the dog of all dogs, but she survived. I'll give it to Kathy. So this thing is 78% of the high and can't help itself to get back up, right? It's just, and the reason I keep weekly is, obviously put a daily is going to look a lot different. I don't want people to forget how much is underwater and how much money was lost, right? And we go back to your FinTrade dribblers. That's where they lost, because that's all the same crap, okay? Now here's the one that those same dribblers told you not to bloody buy all those tech. Look at this one. So Exxon, we talked about at the top of the hour. Relevant, Permian, Pioneer. They clean shop. So remember, these blokes like this couldn't get a loan. Yeah, they were the evil doer. But you need energy until you don't. So transition, it's kind of like transient inflation, the other side of that. Right, remember, we all know the whole thing with the Fed and that. So energy transition, same thing. It's a longer term thing. But it happens pretty bloody quick. So the end of the world people... They go, this energy, Russia, blah, blah, blah. Look how quickly, yes, they got debt and it hurt the banks, but look how quickly Germany in particular and France, with all their problems with protests and nukes and all this sort of stuff, they managed to keep those energy prices collapsed. In other words, they went up too high, and we've gone on before, and it's on the side about Uniper and all that, paid the top, all this sort of stuff, right? Look at the difference between the US, these well-run companies, right? The the crap got thrown out. And don't get all bulled up on energy and all bet up. There's a time to buy and a time to sell. So these they became more efficient. And also remember that if we take Texas, is the biggest wind producer as well as natural gas and oil and all that for the states, right? So it's efficient. And that's what this is too. We hope they keep that way. So when I see them buying Permian, we want to see what price they pay, right? So well-run machine. This is a dividend as well. So that's why we watch that. But it's also, we want to look at, so when I see a bloke that hated oil down here, let's say a Gore type, and then they're recommending it up here, which we've seen with some of these, you've got to keep your eye on that, right? Horses for courses. Okay, that's your equities. Bonds we went through before. Okay, commodities, and that's got its own section, but you want to look at when on. We mentioned the top of that, ethanol, biofuel. That's all to do with what? OPEC, right? This is to do with weather, coffee as well, where they make ethanol from. Sugar down in Brazil, corn up here, right? Look where corn is versus sugar, right? Sugar's a 6-year high. The boss did a report on that, I want to say. So lumber actually rallied off lows, but in commodity you'll see that it's come all the way back. That's relevant looking at definitely the housing, right? Construction. So a lot of these things are going to get way higher. We saw that with oil, which will go down again, right? They tend to get overproduced over. What's saving oil and gas right now is Russia, really, right? Just be blunt about it. Took all that off the market in many ways, right? With an economy like this. And look at where natural gas is, because that's domestic. Look at that. Down another 8%. That went under $2. We'll look at where they are in a minute when we get the charts. But so I want you to look at all these, look at what they are, look where copper is, who's spinning it. Look, just because Trafigura, read up about their nickel thing. You want to read about them. No offense to blokes there. Good shop for the most part. But those things happen. It's kind of like the banks, right? Same thing happens to the best of us. There's so much of that out there. I've been caught over the years. We've all been caught when it's not as what you seem, right? And who you're dealing with is not as they seem. So look at these. Look at where they are. That's just over the week. But go look at the longer term. Go to here. There's the Commodity Trades Weekly covers all that, right? And there's a quarterly update. Keep up to do with that. So we just want to look at the big one. So copper, very similar, but copper's holding up there. So yes, it's also very important for the ESG. So now, if we go back to oil, all of the con jobs, the Enron types, the overpaying, and that's where it's relevant what Exxon's doing with Pioneer, if that comes. If not, it'll be someone else. Exxon will pick up. Seems like a good fit. But anyway, if you think of all those that overpaid back in the Permian, a lot of those companies are gone, right? They become more efficient and the deadwood's gone. Same thing is happening with the ES. When I should talk more EV, right? So we want to see how that plays out. You've seen so many of those go by the wayside. And remember, Tesla, for its part, is not just a car company, right? Batteries and the politics involved, where they are and all that sort of stuff, right? Okay, so look at this. This is copper. And we haven't got... So this is potentially if it retests that breakdown, but if we go across, this is all it's done. It's retested this break. 1, 2, 3, 4, 5. We want to count 3 waves. Find the bottom of it. All this may be, is a correction of this whole move, right? Which means this becomes A, B, C. So look at both alternatives. Don't fall in love because someone writes a bloody analyst report or your portfolio looks better if you're the right way. Look at the big company, right? Involved. So we look at gold. So we go on and on and on and on and on and about. Look how many bloody years it's taken. Still hasn't got to this level. It's over 2,000, right? So this is a currency play. Look at this. Bitcoin took over here from a lot of that, right? So we would try to label these here. The yen collapsed, boom. They went up, the dollar peaked, and we rallied. It's really that bloody simple. Look at that, look at yields, look at the dollar, okay? And we know China beat the shit, bought the crap out of it, but they also bought the crap out of oil at 120 and 140, right? Okay? Okay, let's get to oil, and you got all your own reports, and if you're not following around the barrel and into the vortex, you got some really, really good contributors, some of the best people out there, really big traders, good analysts that have become good friends over the years, right? And you got a good, healthy mix, and when it comes to energy, you definitely want to be aware of any partisan biases you have. And I don't just mean left-right politics, but old age thinking, new age thinking, new energy, old energy. So what I like about that group, you got some really normal left and normal right people. I mean, look, there's a few blokes and ladies out there that are too extreme to be around energy and they don't get it. So toss them. But you want to look at those that are on the air that understand how the other side thinks, right? Very, very silly industry to be in if you're too much one way or the other, because you're going to miss the whole transitions. And we've had multiple transitions in commodities over the years, right? It's the game. Rubber always meets the road. Some of the best traders come out of that space because they learn that. They're not out of equities. I'll give you the tip. So this is pretty simple. We got the OPEC gap here, but look all it did, punters. So these blokes are screwed if, right? So already there's a lot of bridges being burnt in the whole geopolitical war. Then China's trying to not burn too much. So I don't read too much in the currency spot because that's been going on anyway for a long time, right? And there's a whole good article. We went through a whole lot of that on the FX report, worth reading this week, about all that, right? So forget the friggin' guys trying to flog you gold shares, gold or whatever, or oil or whatever, you know. So we got that gap. These always fill, right? Hey, more, you know, it's not that far below in reality. This is the dog of the day. So the dribblers are all telling you to buy this here, but those that have been around, we've seen this. You've seen all these. Remember this is a domestic thing, so always remember that. So you've got basically natural gas, you've got from where we are, we got the Europe, which is the Dutch, you got the English and the US, and you got all the bases in between there. And then you got the LNGs, so you look what goes on in Asia. And in Asia, remember, Australia is really part of Asia, right? So you want to look at all that. But look at what we got here, and we'll look at where all this is at the minute. But this was a classic 3 or 5. 3 would mean we're going up here again sometime. Could happen. 5 means that was it, Freddie. Now, if you believe in transition and efficiency, that might have been it, right? I believe, and so we got all that. We look at the freight index, the Baltics. So we look at that, and that's got its own report as well. Because you want to look at what's making that up and the different. So BDI is the overall, but you want to look at Cape size. Is it Cape size or Cap size? Panamax and other stuff. So keep a good eye if you're not following Ollie from Denmark. He's at Saxo. He looks at this, but also a lot of other stuff. So personally, I don't trade a lot of this other stuff, but I look at how it affects what I trade or invest in, right? So that's going to be oil and gas and SPX and bonds and some currencies actually trade, but all this stuff makes it up. So I try to find blokes that are either really good traders, really good analysts that know really good traders, and so you'll see them in the report. So follow those people. Ignore those we don't, right? And then we've chunked a few over the years. We've turned out to be full of it. So read all that. Read all that stuff. Crypto. So what have we done? So we look at Bitcoin and Ethereum, right? Actually, that's interesting. So Bitcoin is a great measure, even if you don't want to trade it, which I don't, no secret there. My mate, one of my best mates, Romano, he's a legend. He says, I wish you'd trade it, but I'm afraid it'll... There's certain things I won't trade the pound, for example, because it upsets kind of the other stuff I trade, right? But what I do is I look at it because it's such a great measure of the crowd. And look at how it moved, right? And it explained here after Biden wins and Trump loses. Then you got Dorsey buying up. I mean, look at some of these things. Tesla bought it and then flogged it. The CBDC chatter. Look what that did to Bitcoin, right? So the whales got out. Little bit, but then at the end of the world, FTX, US dollar reversal, the thing actually rallied. HVB collapse, it rallied. So this is a great microcosm of the more aggressive trader. And remember, this wasn't around when we all began trading, like a lot of the other stuff, right? The internet wasn't around when we started trading. Mobile phone, they're around. But anyway. So you got to remember what this is representing. This is representing people that have never traded or ever want to trade oil or gold or stocks maybe, right? But there's many of it and in different countries. It's a global phenomenon as well, right? So, and then you got Ethereum versus Bitcoin, very relevant too because of the nature of it, right? Okay, so banks, we all know that's a good little run through. We keep that there so you remember what happened. You got the earnings coming up. There's a good run through the boss did on first quarter earnings and KBW, good article on that, how they readjusted everything and explain of it. So go through there all on the website. There's links there. We can just go to the website. So what do we got? Central banks. We talked about Korea. We want to watch Canada, Peru not so important. And go through them. Now, data, the ones we're watching are going to be through the 3 bond auctions. So you got a 3, 10, and the long bond, right? How they go, who's taking them. You want to look at the indirects, which is the overseas versus direct, which is domestic. And obviously the takedown, so you know whether so just simple, just look at the basic if they go more for what the price was just before the auction and after. So that you want to look at that. So usually the boss does an article after. Then there's Matt who it's late and it's Easter and we had lunch. But anyway, there's a couple of blokes. You'll see him and the boss always talk together about bonds. He's Canadian, was a big bond trader, rebuilt everything, so I got a lot of respect for him. He might not be everyone's cup of tea on social media. He's a little bit, if you're a real lefty-righty kind of thing and precious, well, you shouldn't be probably bloody trading anyway if you're precious. But anyway, then you got CPI, the big number on Wednesday. It's a consensus, and it's got the numbers there. And PPI the following day. Then you're going to get... This one's going to get... So remember, we were all out, and we went through those job numbers on Friday. So this continuing claims and this jobless claim is going to get a lot of attention because remember, the last one had a big upgrade. So this is the jobs number that's relevant that you want to be watching. And no doubt Mr. Powell's going to be watching. You got your oil numbers. So your energy numbers are relevant this week because we got the OPEC monthly report, IEA, right, and the EIA. So overseas, EIA is America. We're going to have the short-term energy report. So you got a lot of stuff coming out if you're an energy trader. Also, we're going to have industrial production out for the States. Overseas, you got Canada, and Freeland's going to be talking, which is going to be relevant with the rates. Home sales, very big deal up there, right? Talk about bubbles. That in Australia kind of got ahead of it all. Mexico, remember we watched that, so we watched the peso. We want to look at their reserves and production. Europe, you got retail sales, you got the CPI, etc. Your Macron's all over going on about the US dollar tonight. I mean, so this bloke here isn't very popular. It's just you got such a bad political... So I lived in France for a long time, traded there. A lot of times there, right? So Macron is in by default. You have basic crazy racists on the right. Let's not dress up who Le Pen's father was. You had really bad socialist presidents. That's where Macron came from. Really bad riots. The last one before Macron was a guy called Fillon, who was involved in what did he do? Gave his daughter $1 million on it. Then you had Sarkozy was next. He got charged. So you're going about Trump getting charged here. Well, it's happened before in France and everything. Obviously, this one's here very politically motivated. But just because it hasn't happened in America before doesn't mean world leaders haven't been, of the West, haven't been charged before. You know. So, and in England, what do we got? We got Bailey talking GDP. Actually, Tanriara and Pill also talking. China, you got all that inflation stuff. Japan, same deal. The machine orders, what they watch. PMI, they want to see if they pull back from, I think, was it a 20-year high, I think. Shimizu's going to be talking. People like to listen to him. India has their inflation, which is relevant because the RBI did not raise, remember? So if it's back into that 6% range, whoopee-doo. Australia's got the big jobs number, consumer confidence, business confidence. New Zealand, remember they raised 50%. So that's a small economy. So we want to, that was kind of aggressive down there. Kind of a mixed up. That country was locked in for a long time by that previous leader who was a populist leader, quit when she wasn't popular anymore. Really that simple. Earnings, we know all about the bank earnings. Actually on Thursday you got the big guys out on Friday. JP Morgan, PNC, which is the one I'm watching. Citi, Wells Fargo. The day before you got Republic. It's not in that list there, but you got Delta Airlines. Or energy traders always watch that one. For jet fuel, more than anything, right? And then you've got Tilray for the bong heads. Lost all their money on that one, they did. Never invest. There's a good lesson, right? Not just partisan. If you like weed, you don't invest in it, right? Don't smoke your own supply. Basically what happened, a lot of people bought that crap, that stock and others. And I had a quick read of someone's preview. That's what I'm looking for. They're mad. Well, I think it's a healthy sign that not much adults are smoking weed anymore. So I'll probably be doing something else. But anyway, so that's one of the reasons that's down. And craft brewers aren't doing as well, which was what they were getting into, right? They were lacing. Oh, can you use it? So anyway, so that's what's going on. You got your IPO report that Harley puts out. So that's a good one too. Basically, they're nearly all Chinese, I notice. And there's maybe some big ones coming on. That was a disaster last year, which also forewarned what was going to happen. Okay, so that is about it. Well, you know what? Let's have a quick look at the charts. I know that I promised that. So let's look what's going on. Oil's trading around 80. Remember, Australia's off. It's Easter Monday. So this should be a late. This isn't Spurs, this is SPX. Mirroring it. You can see what's happened. Natgas is trading above 202. Not much change. That will, if the weather run tomorrow, will be what influences that at 5:30 my time. So that's your indexes there. Okay, let's have a real quick look at energy. So this is what I wanted to look. So this is either 1, 2, 3, A, B, C, and we're going to go a lot higher, right? Or this is 1, 2, 3, 4, 5. We got more work to do. So to keep it simple, you got the gap here, you got the twist, right? You had this break above. See, so when I see all this, and we know there's a lot of action goes on, like producers and consumers, energy consumers, hedging, right? So if we see that kind of action, you know that there's got to be a lot of delta covering. And you can apply this to stocks, but this is a heavier market. Well, it's true, right? People use the oil. It's a true asset. or they produce the oil. So very simple there. Do you want it to stay above there? That's a daily. On a weekly, you can see more specific. So you can see what's going on here. This is why, if Biden really wanted, he had plenty of time. I mean, I have no time for his energy secretary. Wrong person. You got to understand the market. So look at this triple bottom. She could have bought here if they really wanted to replenish it. Maybe they didn't though. They could be. We do produce. Texas was the biggest producer for a while, so maybe that, right? And if you see, there's more to this than just inflation. If you want to transition into other forms of energy, right? Which is interesting. Texas already has, but apparently, if you read the whole left-wing, right-wing bullshit in America, you'll think they haven't, right? So many countries, we could have done a lot more things efficiently from solar rather than political and helping your mates out, right? It's just such a mess here, the lobbying thing. Let's not get into that. But I just want you to look at this. Bam, bam, bam. There's your support. 3 waves. Look at all. You can see the resistance. Look at your open interest, right? A lot of people, a lot of banks, they've made a lot of money, a lot of big companies. And you saw that Exxon, and we'll get to the natural gas charting, see where. So that's that. Look at natural gas. So Exxon took like a $1.6 billion loss they announced last week. You can bet that's all this, because they've still got a hedge, right? They've got so much coming out. So they obviously should have, woulda, coulda, shoulda. They're just new to hedging, trading. But look how far this fell. So a lot of these producers, we looked at EQT, I think it was, we commented on that maybe not long ago. They were like 60% hedge, maybe 50%. But a lot of people didn't hedge at all. Look great on this, but not so good on this, right? So now with oil, as oil falls, someone like Exxon, who's chemical, has that big chemical, then they get cheaper feedstock, so they have a play. With oil and with natural gas, it's a different game, right? And then Freeport was down, so you make more money on LNG, i.e. the spread to Europe, etc., right? So anyway, that's weekly there. Daily, we have all these on the report. We went through stocks, didn't we? Or we just looked at them long term. So so here's Germany. I want to look at real quick. So this is the DAX. So remember, you're hearing how Germany's screwed, end of the world. Well, the stock market, which isn't their economy, but it shows you in the future. Look how far this has come up, right? So don't believe everything. Make your own opinions. Here's the Australian one. Look at that little... So apparently that was the end of Australia with China. Look at relevance of China in all this stuff. When you're getting all too much of all this fake news with Russia and Ukraine stuff. China, I mean, it's... Use your common sense. Here's the Bund, right? So look what it did here. Remember, this is the Bund. So just think of rates, right? Is the opposite to this. So that means rates rising, which we know through ECB, but look how behind. So the market forced these people to raise, in my opinion. The the bond market lend it. So anyway, we don't want to bore everyone with that. We'll leave you with that picture before we go. So like and subscribe if you like it. I know we dribbled a bit. It's been a while. There's a lot coming out this week. So do yourself a favour. Let me get back to where the website was. Do yourself a favour. Jump on the site. There's a lot of good stuff. That's why we want to do it. So you got the Market Weekly out here, which we just went through. So you got all that stuff, but you also got the boss gone through with a review on PNC, on all the different banks, right, that are kicking off earnings. Wells Fargo, JP Morgan, lots of good stuff here. Citigroup, this is all free, by the way. I mean, basically this site survives by generous people, ex-traders trying to do the right thing by people, and basically ad revenue, people clicking on ads, basically, right? We do, given that we do cover Estonia even, right? So we have the central banks, what to watch for. And then we actually have now, over time, we have our own commodity, so all the different commodities, bonds, breaking news that we think is relevant and should be looked at significant, so Exxon, the World Food Index, something like KBW when they come out. So do yourself a favour. The big ones, obviously, into the vortex, natural gas, around the barrel. They've been around for years and really popular. And then the big economic news we think is worth watching. We also have a shipping monitor. So do yourself a favour, go like and subscribe, join the site, follow on Twitter ourselves or other people that actually understand the Nova Wave for the technical point of view. There's a lot of good followers, the providers, and most of them will talk. Bear in mind, people giving or taking part in the website are traders, right? And not hobby traders, but real traders. So keep in mind, if they can't always get back, it's because they're busy. I know when I'm on Twitter, it's when I'm trying not to trade in particular, right? So thank you for that. Thank you for listening. There was one report, I don't know if Helmet or someone usually does this, but I'll see if I can find it. But anyway, I think it's the New York Fed. A couple of years ago, they started an index for, I forget what it's actually called, but it's the difficulty of the supply crisis, and that's really, really come off. So everything is, we're in a lot better situation, given there's a war and all that. So a lot of this stuff has worked. So I'm not an end of the world. Look, a lot of people have been totally destroyed, right? So unfortunately that's happened. It may take a generation for certain people. We know how the welfare cycle works. But as far as the whole thing collapsing, it seems to be waddling its way through. So we're actually going to have, I think, a dual economy, a split economy, very much a good capitalism, free market, rather there's bad capitalism too, where people frauds and people take advantage and all that sort of stuff. So hopefully that all gets sorted out. So you're seeing that. And the sad thing is, I think the breakdown in the West, in the US and England, Australia, and Australia's not as bad a shape because they kind of got rid of the lobby. There is a little bit of lobbying, but it's not like what runs here. And the whole WEF influence isn't. Look, there's so much misinformation, and particularly about Australia. I just know it because it's where I came from, that it's fake. But what you've seen is there's no good politicians, right? And politicians have so much power. And so the bad side of capitalism is greed. And so a lot of these guys are bought. You've got career politicians in the US, right? The Bidens, the Clintons. And you got that in a lot of countries. We're talking about the US. Then you've got a lot of graft on both sides. So no one good wants to be a politician. And why would you be with social media unless it's their career, right? And so whatever you think about Trump, whether his intention was real as a true patriot of America, anti the swamp, all that sort of stuff, or he was a grifter, whatever. So you've seen how it's all played out. What it's done, for better or certainly, is taken attention and divided places, which allows these career politicians, and they're on both sides. Go look at the terms of these blokes and ladies, right? So the market, through its wisdom and power of price, and you see this in energy with Russia attacking and where we are now, right? The market has a powerful way of flushing the turds out, for want of a better word. And on that note, I will let you all go. Thank you for listening to The Dribble. We have gone on. Good luck with your trading. I hope everyone had a wonderful Easter. If you're a believer, a follower, a Christian, or what that means to you. If you're not, then I hope your holidays were very well as well. And the thing with all these, whatever you believe or don't believe, is it's all about family and friends and respecting others, right? So on that note, I will say good night. We will try and do a few more of these, maybe more specific, if we can fit them in. It's just got really, really difficult time-wise and away from them being relevant. If they're too far away from trading, it's not as relevant. So anyway, thank you for all the kind messages and words, support, wisdom, and we will see you later. Remember, this is not financial advice, it's just chewing the fat, so to speak. Hopefully there's a little bit of some good noise that comes out of us through it all. See you later. Let's stop talking, huh? Bye now.